To level set, in Bitcoin custody, the goal should be to eliminate single points of failure.
On the opposite end of the spectrum is self-custody. This has long been hailed as the gold standard in Bitcoin. With self-custody, you own the keys, you own the coins. No intermediary, no counterparty risk. Managing Bitcoin in self-custody requires deep technical competence. You need to understand hardware wallets, seed phrases, pins, BIP39 standards, and increasingly, multi-signature setups. For years, the mantra was, not your keys, not your coins. And while that's true, it ignores the reality that most people are not equipped to be their own bank.
The options for custody in Bitcoin are still largely binary in that you either choose a single custodian and expose yourself to the counterparty risk of that one institution, or you can be in some form of self-custody where you've taken on all the responsibility, but then all the risk lies with you.
Mhm.
And there have been attempts over time to come toward the middle, and I've helped thousands of clients through the years to onboard to collaborative custody multisig, which I think was absolutely the best form of custody for individuals prior to what we've created here with multi-institution, but it still placed the burden and responsibility on the client completely. And so we can talk about, the evolution of custody and what's really needed as this becomes a $2 trillion asset to $100 trillion, $200 trillion plus. But let's start with single institution custody, because I still get the question very frequently, more by newer investors, but why wouldn't I just do Coinbase? Like Coinbase doesn't charge me anything, or I can just pay a little bit more for their vault service. Like, what are you guys doing so much differently than that I should consider, what OnRamp is doing uniquely? So to level set, in Bitcoin custody, the goal should be to eliminate single points of failure, just to make sure that whatever custody solution you're using, you have a backup, you have redundancy in case something goes wrong. You're not at risk of losing 100% of your Bitcoin. And that's really hard to accomplish, it turns out. And I would argue that almost every solution prior to ours, which is going to sound like I'm talking my own book, I am, but we've been looking at this problem for a very long time and working to solve it. Almost every other solution does have a single point of failure. There are many that I want to touch on in single institution custody briefly. If it's self-custody, it's typically the person who's managing that setup. They're the technical one. If they've done the diligence and the work, they're typically the only one in their family or their business that really knows how to use those hardware wallets effectively. So single institution custody at Coinbase or any other firm going back to Mt. Gox times, there can be insider collusion. There could just be malpractice of mismanaging the keys, like we saw with Prime Trust. There could be malfeasance. There could be a large hack of their systems generally, like we saw with Bybit, where they have the largest robbery of all time, $1.5 billion worth of, in this case, Ethereum was stolen. It could be just your account is hacked through some sophisticating phishing scams. And I've had very sophisticated clients through the years that are self-custody most of their Bitcoin, but they are still even phished by the small amount of Bitcoin they had on Coinbase. So it's not just occurring to the new investors. You could become SIM swapped. There's no shortage of ways where one thing goes wrong with Bitcoin being held in a single institution, and then Bitcoin is locked. Or the big one is just they can just freeze withdrawals either entirely across the platform, like we're seeing with Abro right now, or just your account for some reason can be flagged and your access is predicated on them allowing you to access again, just like in the fiat world. So the self-custody side, that has been absolutely the winning move. As tough and as challenging as it is technically to learn how to use hardware wallets, understand what things like multisig, passphrases, seed phrases, pins, BIP39, all these, it's really required someone to become a part-time self-custody expert if they want to hold any material portion of their net worth in Bitcoin. They really have to dig in. Otherwise, they're just rolling the dice. And there's a lot of horror stories on how people have lost Bitcoin through the years. The lens that we look at custody through is years of helping thousands of individuals to hold Bitcoin. I've literally personally helped thousands of people and onboarded billions of dollars. And you learn a lot through that process. A couple of things, like one, everyone will tell you they're not technical.
As Bitcoin scales into the tens or even hundreds of trillions in global market value, custody must evolve. The current binary of Coinbase versus a ledger will not cut it. Wealth managers, institutions, and families need solutions that combine security, transparency, inheritance planning, and operational ease. In the future, most people may treat self-custody the way we treat cash or gold coins at home. You might keep a small portion under your direct control, enough to feel independent, but the majority of your wealth will be held in multi-institution custody.
And there's a number of verification processes that are involved with that. But for the first time ever, the long and short of it is that an institution could fail for any reason. For a short amount of time, they could be unavailable. They could fail completely, going out of business due to mismanagement, be hacked. And the client's Bitcoin is completely secure because they can work with the other two institutions. So that in itself is a major innovation because, right, like as you know, anytime we hear about an institution suffering an attack or going out of business or co-founders colluding, typically it's safe to say that Bitcoin is gone or that client, customer is in bankruptcy court for years and maybe recoups pennies on the dollar in dollar terms. So it's just that Bitcoin is essentially lost. But this allows someone to not have to take on the operational burden of holding their keys, not put themselves at risk from physical threats, which is really on the rise now, particularly in France and Europe. But as Bitcoin goes up, expect that to be a concern for Bitcoin investors everywhere. Push that to the institutions, but still retain visibility into the wallet. They have their own wallet address, so they can anytime essentially create their own proof of reserves where they're copying and pasting their on-ramp deposit address into either a block explorer or a node, and they can always check, okay, great, my 10 BTC, those are in this wallet, they haven't moved, they're in cold storage, my Bitcoin is not segregated with all other clients, Bitcoin investors on the planet. And it's because they already have a fundamental basis of what multi-sig is, and they understand very deeply why Coinbase or Gemini or Kraken are not a good option for the majority of the Bitcoin. As good of a job as those institutions try to do, by the way, I'm not trying to fault them. But if someone's newer to Bitcoin, they would say, well, Coinbase is a publicly traded company. They're the custodian for most of the ETFs. Like, they're the blue chip. Why wouldn't I go with them? It takes someone who really has understood and felt counterparty risk, but has also felt the challenges of self-custody to understand the unique value proposition we're providing, where typically most of the people are coming to us because either they're holding a single SIG, they're holding a Trezor or a Ledger or a Cold Card, or they're using something like Unchained or Casa, which is better if they're technical, but they're still running into two major challenges, which are one, inheritance. They're the only ones almost to a T who know how to operate those hardware wallets and know where they're stored and basically know how to run down that treasure map. And that's what they've been left doing, is handing over a piece of paper to their wife or their husband or their kid, hoping that if they die unexpectedly, they'll be able to follow that without any help. But we all know every time you go to do a key check, you yourself are thinking like, oh man, what's my PIN again? Or the device kind of half works, or the cable doesn't work. And if you're really competent, you know how to troubleshoot these things. Like, oh, my browser needs to be updated, and then the firmware needs to be updated, and I need to do these couple things, and you can get it to work. But it's kind of like starting up a rusty lawnmower, where if you pull the cord and it doesn't work, you're SOL. Like, you have no ability to get this thing going. So a lot of people come to us for that and still maintain Bitcoin and self-custody, and then use us in tandem. Now, over time, the trajectory of that is that people end up putting most of their Bitcoin in multi-institution custody. I think the way that this goes long term, I know I'm trying to have some humility, that the percentage of Bitcoin that one keeps in self-custody will be similar to the amount of cash someone keeps in their gun safe at home. Or you have a few gold bars or coins at home. This is the amount of wealth that if you're robbed or the house burns down or it's misplaced or mismanaged, it's not going to be great, but your life is not going to be affected, and certainly the welfare of your family and the trajectory is not going to be affected.
Bitcoin custody may not grab headlines like ETF approvals or price predictions, but make no mistake, it is the foundation of Bitcoin's future. Without secure, resilient, and user-friendly custody, Bitcoin cannot scale into the multi-trillion-dollar asset it's destined to become. We've seen the failures of single institution custody: hacks, fraud, withdrawal freezes. We've seen the burdens of self-custody, complexity, inheritance challenges, and physical risks. And now, we're witnessing the rise of multi-institution custody, a model that removes single points of failure, preserves transparency, and makes Bitcoin ownership both safe and scalable.